you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on individuals, advisors and institutions.
Hello and welcome to Morningstar. I'm Emma Wall, and here with me today to give his 3 stock picks is Lewis Grant, manager of the Hermes Global Equity Fund. Hello Lewis.
Hi there.
So what's the first stock today?
The first name is Toyota. It's a company most people are familiar with. It's the largest car manufacturer in the world. And the reason we really like Toyota is because it's a very steady company. It's a company that I would say ticks all of the boxes. So they have a very strong balance sheet. They have good, stable growth, and they have high margins that are increasing. They also have an attractive valuation, and they're benefiting from the weaker yen. But what's really interesting about Toyota for us is they have a real focus on corporate governance, and this is very unusual in Japan. They're actually one of the leaders in corporate governance in Japan. And over the last couple of years, we've seen them take positive steps, such as they've added 2 independent directors to their board. And that's the first time in their history that they've done this. And it's a real positive step that for us as long-term investors, we think is a great sign and a great opportunity.
Japan on the whole has a problem with an ageing population, with a shrinking number of individuals of working age, and companies such as Toyota, which are quite labour intensive, are damaged by this. Is this a concern for you, or is automation going to sort of fill that void?
I think automation is definitely a big answer there, but we do need to keep an eye on the demographics. We're very bullish on Japan generally, and the demographics is one of the biggest headwinds there. We are positive that Abenomics will take further steps to resolve this. We've seen steps in the right direction, but not enough, and we're watching closely to see enhancements there.
And what's the second stock today?
So the second stock is another Japanese name. It's Kyocera. Now, their main product is ceramic components for semiconductors. Now, when you think of Japanese technology companies, you probably don't think of Kyocera. You probably think of Panasonic and Sony and Nintendo, big consumer brands, and generally their best days are behind them. When you think of component manufacturers, you probably don't think of any Japanese companies. You probably think of other Asian countries, Taiwan maybe, but actually the high-end components are still coming from Japan. So when Apple and Samsung, when they make the latest smartphones, when they make the tablets and they want bespoke, high-quality components, they go to Japanese companies such as Kyocera, who are able to offer that customization, offer very high-quality semiconductors or other components. They're also a very diversified company. So they do offer a whole range of different products, and that takes a lot of volatility out of the stock.
And I suppose that also mitigates the risk that if Apple turned around tomorrow and said, we're going elsewhere, it's not going to be as damaging?
I think that's absolutely true. There's no one dominant customer, and that's really important for us. We're not into single bets that can just turn overnight. That's not what we do.
And what's the third stock today?
So the third stock is a European name, and it's Valeo, a French auto parts manufacturer. Now, this is an example of a company who has completely turned around their business over the last few years. They've been a very difficult few years, and they focused on fully restructuring, of trimming the fat, removing parts of the business that weren't adding value. And they now just have 2 main product lines. And the first of those focuses on CO2 emissions technology. This is obviously a huge theme in the auto parts industry. And they are really leaders in this space. Their other focus is on intelligent driving. This is automation. This is the automatic wipers and headlights, all the way through to self-driving cars. So the stock is really focused, the company is really focused on these 2 key themes in the auto industry. The stock isn't cheap though. It is trading at a high multiple compared to its peers. But when you look at its growth, when you look at its high margins, and you look at how perfectly it's positioned in the industry, I think that valuation is more than justified and can actually go higher still.
I mean, you talked about the sort of innovation side of this business. I know from a visit that I did recently in Japan that Japan and also anecdotally the US are really pushing for this sort of towards the automated cars. And I mean, how much of a global player is this French company, or is it threatened by sort of countries that are more, you know, technologically diverse?
Not at all, actually. One of the focuses for Valeo over the last few years has to become a full global player, and they really are now in with all of the big car manufacturers. They really have a global exposure, and they're really one of the leaders in the space.
Lewis, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.